Welcome back everyone. In this video, we're going to take a look at the new SPAC that I just bought in my high risk, high reward growth stock portfolio. This company is still very early on in their growth and development, and this purchase is an extremely risky investment. I actually consider this buy as more of a gamble rather than investment because I'm putting my capital into a company that doesn't have any revenue or income at this current point in time, and I'm hoping that over the next few years, everything they're planning works out and they can actually become profitable. So right now there's a lot of associated risk with this gamble, and it could either work out extremely well and the company could go 10x from its current level, or it could actually go to zero. And the company we're going to take a look at in this video is called Momentus. They're a SPAC that operates directly in the outer space industry, which I'm actually bullish on over the next few decades. And they're the first ever direct space infrastructure company that's hitting the public market after their merger with the SPAC SRAC, where it currently trades for $12. And like most SPACs back in 2020, they were sitting at the $10 range, and once the merger announcement went out, we saw the share price climb to a high of over $27, and from that high point, it has now seen a major decline from over 27 back down to 12, which is a 56% drop. And at this current level, just $2 above the pre-merger announcement, I thought it'd be worth the risk to buy a couple shares for my high risk, high reward SPAC portfolio. And we can see I purchased 20 shares of this company. Right now, it has a market value of $239. So although I consider this more of a gamble, it is very small relative to the overall size of my portfolio, which is 4,500 in this high risk account. And of course, if you include my dividend portfolio, which now sits at over $95,000, a $200 gamble that could work out really well or go to zero isn't really risking that much of my capital. So although I am a very conservative investor, I do like to play gambles every once in a while. With a little bit of capital, I'm not too worried about losing. And before we continue on with Momentus, I'm going to ask you to please hit that like button and subscribe. I am the Gen Z investor, and every single day we talk about the stock market, going over different stocks you can buy, and any major market news. So please hit that like button, subscribe for the daily videos, and just remember, I am not a financial advisor. Nothing we talk about in any video is a recommendation or advice. I just share my personal opinion on companies and the performance of the overall market. And now we can continue on with Momentus, the SPAC deal that's going to be valued at $1.2 billion, and after the merger takes place, the company will trade on the NASDAQ under ticker MNTS. And this company is positioned as the first ever truly space infrastructure brand that is focused on the last mile delivery. Momentus has built their very own outer space transfer vehicle, which they have named Vigoride, that helps deliver satellites from a rocket to a specific orbit. So this product gets attached to a rocket from one of their customers and gets shot up to outer space. And then once up there, their product detaches, holding the customer satellite, and delivers it to the specific orbit. And their point of difference is that they can deliver satellites to the specific orbit for a fraction of the cost. And right now, their Vigoride vehicle says that they can reduce the cost of reaching orbit from $50,000 per kilogram to around $15,000 per kilogram, which is less than a third of the price, and that would be absolutely huge. And the cost of operating a satellite platform at less than $1 million per year is well below the $10 million per year the company says it uses in the traditional system. So right now, their point of difference is that they're offering a much more affordable way to get your satellites to the correct orbit. And as more companies continue to send hundreds, if not thousands of satellites up to outer space, the demand for this service is only going to continue to grow. And now we're going to move on to the company's latest investor presentation, where we can see that Momentus is already partnered with some of the largest space organizations on the planet, which include SpaceX, Made in Space, NASA, and Lockheed Martin. And the company is a first mover in the industry, offering in-space transportation and infrastructure services. And they operate in a hub and spoke model. And after their latest partnership with SpaceX, I think this company has a lot of potential. They host payload services that significantly decrease the cost of developing, launching, and maintaining satellites, and they also repair and refuel satellites that are in orbit. And we can see going forward, the company has a strong backload of around $90 million in total revenue, but in conversation and in under negotiations right now, they have around 1.1 billion of total future sales that are in the works. And we can see that this company's vision is a future where humanity is well equipped with all it needs to flourish throughout the solar system. And their mission is to provide the infrastructure services that support all industries beyond Earth. And they believe they have a huge market opportunity because at this current point in time, the entire space economy is worth around 415 billion, and that's expected to grow to 1.4 trillion over the next decade. And now we're going to take a look at how Momentus's last mile delivery service actually works in outer space. So the first step is a rocket that carries both the Vigoride transfer vehicle and the customer satellites, takes off from Earth and enters the initial orbit. And then step 2 is that Momentus transfer vehicle holding the satellites actually detaches from this rocket and then operates its own flight path. And then from there, it delivers all the satellites to their specific and final orbits from the customer, and then this vehicle, the Vigoride transfer vehicle, can either refuel or it deorbits and returns to Earth. So that's how it kind of operates in a very simplified version. And this is how the ride sharing effect takes place, because this Vigoride transfer vehicle can actually hold satellites for many different customers on the same mission. So that's what makes the cost go down, because each individual company does not have to send up their own rocket for their own specific satellite. Rather, they can all come together and use one Vigoride mission to deliver multiple satellites to their own unique orbits. And this is not the only operation that Momentus has planned. They also operate different in-orbit servicing, which I think is actually going to bring a ton of revenue into the company over the long term. And some of the services they're planning to include, such as repositioning, repairing and refueling, life extension, and deorbiting. So I think as a whole, it's going to be a really big deal that this company is going to be a leader in the infrastructure sector that's going to be the service name in the large industry. More and more satellites are getting shot up every single day, and soon there's going to be a lot of refueling, a lot of repairing, and after some damages that can't be fixed, some deorbiting as well. And if Momentus can be the name that's really good at that service and can provide the best opportunity with an affordable cost and great service, that could really lead to a long-term successful business in the space industry. And going forward, we can see the company still has a ton of revenue under negotiations. We saw over 1.1 billion, and their expected demand from companies like Starlink, Amazon, and OneWeb satellites, and even Apple is projected to be 1.2 billion over the longer term. And in this investor presentation, Momentus's executives have laid out the company's future guidance all the way up to 2027. And I have to say, although I did start a small position in this company, I think they have given very, very optimistic guidance that they may not achieve because they have set extremely high expectations. So for the full year of 2020, they were only expecting $2.3 million of total revenue, then up to $20 million by the end of the 2021 fiscal year, and then we see a major jump in 2022 to $152 million of total sales. And then from there, the exponential growth they're projecting is absolutely insane. From 152 million all the way up to 600 million of total sales in 2023, then that will double to 1.2 billion in 2024, then up to close to 2 billion in 2025, 3 billion, and then finally over $4 billion of total sales by 2027. So even though I am technically an investor in this company, I have purchased 20 shares that is only worth around $200. The fact that this company is going from 2 million of total sales to over 4 billion in only a 6 to 7 year timeline, I think is extremely optimistic, and I'm really not expecting that to happen over the next 7 years. But even if this does achieve what they're expecting, they're projecting to have an EBITDA margin of 61%, which would be absolutely incredible, and unlevered free cash flow over the next 7 years of close to $2 billion. And they're actually expecting to be cash flow positive by 2023, which $131 million. So if they can achieve all of these goals, and if these forecasts are actually accurate, I think this company will be massive compared to where they are today, trading with a market cap of only 264 million. If they can generate over $4 billion of total sales with $2 billion of free cash flow over the next 7 years, and they actually can achieve all of these, I guess, very optimistic goals, I think this is definitely more than a 10x potential stock to own in my portfolio. If you think about it, $264 million market cap compared to what they're laying out, I think the company at these projections will be worth over $10 billion. So that's more than a 10-20x on my initial cost over the next 7 years if these can actually take place. But again, I'm going to be very transparent. I don't think they're actually going to hit these metrics. I think they're way too optimistic. And that's why I consider this buy as more of a gamble rather than an investment. Because right now, the company barely has any sales. 2 million in 2020, 2021 expectation of only 20 million. That's really nothing in the massive space industry that costs billions of dollars to operate in. So going forward, definitely a lot of risk associated with it. And that's why I kept my position at a very small level. And finally, they kind of gave a wrap up of the company to close out this presentation, where we can see they're the first mover in the space transportation and infrastructure services. They had rapid near-term growth driven by disruptive tailwinds in commercial space. They have a water propulsionary technology system. They see a clear path to profitability with over $1 billion of total EBITDA, and they believe they have a massive long-term growth opportunities well beyond their current business plan. So this is definitely an interesting company that's going to go public through a merger with ticker SRAC sometime later on in 2021. And after that deal takes place, they will trade under the ticker MNTS. So the company's still very early on. We went over their entire investor presentation. We see they really don't have any revenue or income at this current level. So I started to keep my position very small, only 20 shares. We'll see what happens. And this was the newest, very risky stock I just bought in my high risk, high reward growth stock portfolio that is built up of small caps and SPACs that have the potential to go 5, 10, 15x over the next few years, but also come with a lot more associated risks. And of course, I keep them separate from my main dividend portfolio, which invests in conservative, blue chip, dividend paying companies, which of course is my main style of investing, and that's now worth over $95,000. So thank you for watching to the end. We're going to wrap up the video. I'm going to ask you to please hit that like button and subscribe. I am the Gen Z investor, and every single day we talk about the stock market. Remember, I'm not a financial advisor, so please join the community, leave me a comment down below, and I will see you in tomorrow's video.